Hey everybody, this is a stock trading tutorial on one stock traded 3 different ways in a 1 day period. Now you're going to ask me, hey, did you make this trade? Did you actually do this? And the answer is no, I didn't. It's almost 10 o'clock. It's Tuesday, May 31st. I'm just looking at my charts here and doing some homework for tomorrow, and I saw this chart that looked interesting. Now I know a lot of people are going to say, hey man, it's hindsight. You're looking at something that already happened and you're saying, here's how to do all these things, which I totally understand, which is why I'm going to walk you through this chart as if it was happening in real time to show you how I would realistically, as someone who's been trading stocks for 11 years, how I would realistically trade the stock 3 times in 1 day, how you could potentially do that. First things first, I don't like trading stocks right at the open. Usually stocks that rocket at the open dump, and usually stocks that dump at the open either keep going lower or they have a little fake out. It's called dead cat bounce, and then continue lower. It's like catching a falling knife. It's way too risky. I don't usually do that. If I do, though, what I try to do is make a scalp trade, which means in and out very quick. One of the mistakes new traders make is they get in on a trade, it starts to go up, and they get greedy. They go, wow, I'm up 5, 10, 8% already, and it's only been 10 minutes. Well, if I wait all day, it'll go even higher, and then you end up taking a loss because you got greedy. The thing you have to remember when you're making a scalp trade is it doesn't matter if you buy the stock at $4.90, sell it at $5.10, and then it goes to $7. That wasn't your objective. Your objective in making this scalp trade was to get in and out and make a bit of money. Your objective was to not hold a stock all day, unless you're swing trading the stock. And then we're going to be looking at these charts in an entirely different way. Instead of looking at the 1 day chart, we're going to be looking at a 20-day chart. We're going to be looking at a 180-day chart. We're going to be trying to plot out where the stock has been to see if it's oversold, and to give us a better idea of the potential of a longer-term trade, a swing trade lasting a few days, maybe weeks, maybe even a little longer. This is different. This is a scalp trade. We're hopping in, we're hopping out. So here we buy the stock. Now you're never going to get in at the bottom. Right, so let's just be realistic here. You're going to get in somewhere around here, $4.90, right here where it has this little breakout. And your objective is, I'm going to make as much money as I possibly can in a few minutes. And if this thing goes against me, I'm cutting my losses. I'm forgetting about it. This stock has some, if you look down here at the volume, it's actually pretty weak looking volume. But it does run, man. And it has this one huge candlestick. It has one, and then it has the other. A lot of stock traders on here say, don't chase the green candlesticks. If you're making a scalp trade, though, you do. So you're in, you're out. And remember, if it goes against you, you cut your losses, you get out very quick. So we're in at 490. We're out at $5.10. I'm using straight round numbers to make it easy. I'm not going to go 487 to 503. I'm trying to keep it simple for the sake of math. We're in at 490, we're out at 510. There's a 20-cent gain in a few minutes, and actually in 10 minutes, because this is a 5-minute chart. So each one of these candlesticks, each one, even these little teeny candlesticks, whatever it is, this is a 5-minute period, 5-minute period, 5-minute period. So 1, 2, and we're out. That's 10 minutes. 10 minutes, we're in, we're out. It's a scalp trade. This stock could go to $7 afterwards. Doesn't matter. Who cares? The objective was complete. We hit our goal. We got in, we got out. We made $200. I don't know why I opened the calculator. Next thing, this guy goes sideways, and the volume just completely dies. So we sit back and we wait. We wait for something to happen. A lot of times people on TikTok say, hey, go live and day trade. The problem with going live and day trading is this was 10 minutes. And now the trade's over. And now I'm literally sitting here. Now I have a flexible grid up here where I have a bunch of other stocks that I'm looking at throughout the course of the day. And I'll come back to this one periodically. I'll check in on it. Maybe I'll set alerts. I'll set alerts. Tell me if it goes down. Tell me if it goes to this price. But it's generally, sometimes stock trading, day trading can be pretty boring. You're just sitting at the screen, just like sitting there, and you're going like this, just waiting for something to happen. And it is not until, so we have a clock up here. I'm sure maybe you knew, maybe you didn't know. Right here, there's a clock. Do you hear that? My neighbors are having a party. So at around 2 p.m., something starts to happen with the stock, and it breaks the support line, and it starts to sell off. So what's the trade here? The trade is that you're going to short the stock here. So instead of buying the stock at 480 or 490 and selling at 510, we're going to be selling it and then buying it back to close it. So think about it like this. You buy 1,000 shares. It shows up in your portfolio. It says you have 1,000 shares of the stock. It goes up to your target price. You sell it. Those 1,000 shares are gone, and the cash is back in your account. With shorting a stock, you sell it to open the position, and then you buy it back to close the position. So sell, buy. The shares are now gone. You're not buying it and then buying it again. Right, you're buying it to close the short. So the 1,000 shares in your portfolio, poof, they're gone. So the short that we make is we go right up here, we right click on the price, and we hit sell, and it's going to come up here. And then you go in and you say, oh, I'd like to sell 1,000 shares that I no longer own. I don't own these shares anymore. I want to sell them. You put your order in, boom, your order goes through. Now, as this stock drops, you become more profitable because you're shorting it. It's the exact opposite of buying. So here, like we used relative strength as our indicator to sell, we're going to use so we used overbought as our indicator to sell. We're going to use oversold as our indicator now to buy. So we short the stock at around $4, and let's just say $4 and let's just keep the math easy and say $4.90. We shorted at $4.90, which is right here, and we buy it back at $4.70. That's another 70 cent, or it's another 20 cent gain for us. I mean, it's not a gain, it's a 20 cent loss in the stock price, but it's a gain for us, right? So we made 20 cents here, and we're making 20 cents here. On 1,000 shares, that's another $200 in the same day on the same stock, doing the exact opposite of what we did in the opening, right? We bought it, we sold it, we sold it, we bought it. The last trade, which I personally probably wouldn't even bother to make at this point, but you could if you wanted, is what looks like is setting up to be a dead cat bounce, except that the market closes right here. If the market had been open, right, instead, if this had been the opening, of the day, it probably would have lost interest somewhere around here and sold back off. It just so happens that it didn't because markets closed. But again, for a dead cat bounce, it's very similar to this. We're trying to make a scalp in, out as quick as possible. I see the stock get oversold. It goes sideways. MACD has a crossover, which is an indication that it's going from bearish back to bullish. So we get in right here. We buy the stock pretty much somewhere around here at $4 and let's just say, again, for easy math, $4.70, although it more likely will be somewhere up here. But just to keep the math easy, we're in at 470 and we're out at around 480. That's a 10 cent gain on 1,000 shares. It's another $100. So at the open, buying and then selling, $200. In the mid-afternoon, selling and then buying back on our short, another $200. And then finally, this one last little trade, 10 cents, given a couple of things. One, volume has now slowed down again. It's close to the end of the day. I'm especially not thinking, unless we have a real big surge in volume, I'm going to look at this trade in this moment right here at this candlestick as how high could this thing really realistically go? I'm not expecting a huge wave of momentum, so I'm going to be getting in and out really quick. Even if it's just a 10 cent gain, I'm looking to just make a little bit of money here because, like I said, markets are beginning to close. It's almost the end of the day. It's 3:25, 3:30. We're in, we're out in about 15 to 20 minutes. Make my last $100, 200, 400, 500. That's how you could make $500 in a day trading a stock if you see these patterns presenting. I am fully aware that patterns like this don't exist every day. If you even look at yesterday, there was no opportunity like this. So this is why I say you gotta be looking at these charts all day. You gotta be paying attention and just sitting here. And I know it's boring, but that's an aspect of day trading where you're literally just sitting here all afternoon. Now, to be fair, you might have other stocks. This is my flexible grid. So I might be looking and I might be in other stocks. It just so happens that all of these were kind of losers today. But in this period of consolidation, maybe I walk away. Maybe I go and do something else. Maybe I trade a different stock. Maybe I go to the grocery store, and I have alerts set up here. I say, hey, if this stock drops below 490, I right click and I go set alert, or I say create alert. And I say, if it drops below 490, which it'll see right here, 492, and it says here at or below, I can create, and it's going to go boom, and now I can walk away. I can literally not be looking at this chart. I can be doing something else, and if my phone is near me, my phone will ding, this will ding, and it'll say, hey, your stock is dropping, and I can run back to my screen and go, oh man, this thing is dropping. I'm going to short it. So there you go. That's one stock, three ways in one day. If you thought this video was helpful, please hit the bell, please hit the subscribe. Thanks for watching, and have a good day.